Welcome back, Alpha Hunters. The markets are closed for the week of July the 19th, and we had a great week. So let's go ahead and go through the wrap up here. A little bit of a gap down here to start off the week. Kind of a choppy day there on Tuesday. Remember, Monday was a holiday. Yeah, kind of nice little doji, nice little pullback there. And then on Wednesday, nice little gap down again. Kind of a choppy day though, ending off the session lows towards the end of the day. It's not too bad there. But we got a gap up on Thursday. Now, I'll talk about the Qs a little bit later, but this was heavily led by tech on Thursday, this gap up. And it was one where the Qs gapped up so much, they basically kind of took out the December high. The SPY obviously did not take out, the high, the recent high like last week, but the Qs heavily led that. And, we saw a little bit of a pullback there in the mid morning going into midday, and then we got a very strong bounce there in the afternoon. So it's kind of one of those, if you're trying to be aggressive on, maybe a little bit of a breakdown from that SPY to Qs kind of switch and leadership. You're basically kind of taking it off this day. You might have made a little bit of a profit, but you probably just didn't lose all that much as the Qs were kind of taking out that December high. So it kind of took that switch off the table. So, it is what it is. Kind of happens and works that way in trading. But, that's why you take high reward, low risk kind of trades like that. Sometimes they work, sometimes they don't. And then Friday, nice little gap up, kind of sideways for about 30, 45 minutes or so. And then we just went on a run. We just went on a run here on the SPY, got back to all-time highs. So fireworks, party poppers, all that kind of stuff there on Friday, hitting the all-time high level on the S&P 500, basically any metric of the S&P 500, whereas the SPX or the ES futures, I think the ES futures actually did hit all-time highs back in November or December. I believe it was December, the front month futures. So depending on which metric you kind of look at, kind of depends on when they hit all-time highs. But I mean, they pretty much all hit it now. So there you go, S&P 500 all-time highs. So taking a look here at sector rotation for the week, you can see nice little gap down there to start the week, right? But here midweek, that Thursday, once we get that Thursday open, you can see tech huge uplift there. This is when the Qs kind of talked about that, had a huge gap up. Yeah, and there you go. I mean, tech outperformed a big way there Thursday and Friday compared to the rest of the market. Most of everything else just did not do nearly that. So yeah, a lot of people just continued to flow into the tech area and not really worrying about their market dominance or how concentrated everything is into tech right now. So there you go. That's kind of how the sector rotation was for the week. You see the XLC barely squeaking out a gain, but didn't get nearly that bounce there on Thursday. Now, a lot of this was the semiconductor area of the tech sector. Huge outperformance there from semiconductors. Also, Apple did get an upgrade on Thursday morning, so that's another reason why you see the tech actually outperforming there. Underperformers for the week: financial discretionaries, industrials, healthcare staples, materials, real estate, energies, and utilities, bringing up the lower end. All right, this is another sector rotation. This is kind of comparing to the VOO, which is another SP 500 ETF. I did this on the live stream on Friday. It's really hard for me to compare this to the SPX or the SP 500 or the SPY, as I use both of those and I have a lot of different lines and stuff like that kind of on those. So I had to go back a little bit further in time to make this a little bit cleaner as to see just kind of the market performance. What sectors have performed so well from our previous all-time high to our most recent all-time high. And let me move that over just a tad more. There we go. Energies, the best outperformer over the past 2 years. A lot of this from Energies, first 6 months of 2022 is basically the reason why. After that, it's been basically just choppy sideways. Hasn't really done a whole lot. But yeah, the first 6 months of 2022, that was the Energies. And you see tech has come to life here over the past 2 months to really kind of outperform, and I get it. Tech has been outperforming pretty much since the start of 2023. and we bottomed on the market back in October of 22. So yeah, you can see just how much the market has performed and where we have lagged. There's a lot of lagging sectors: real estate, discretionaries. Amazon and Tesla have not really bounced back as much in 23. 23 was all about semiconductors, Microsoft, and AAPL, which are all in the XLK. So there you go. It's a big reason why they're outperforming so much. Yeah, but discretionaries underperforming, utilities underperforming, staples. Let's see, materials, financials, communications, houses, Alphabet and Meta underperforming there. In line with the market, healthcare, industrials barely outperforming over the past 2 years. So yeah, I just wanted to quickly recap, kind of show how what's kind of performed and hasn't performed over the past 2 years since the last time we hit all-time highs. Been pretty cool to kind of see. I've definitely been wrong on really the past 10 months. Yeah, and it is what it is. That's trading. All right, taking a look here at the VIX, the VIX daily. Very nice move higher to start the week. This is kind of a concern because we weren't really dropping off all that much on the SP 500 or the SPY. But you saw the VIX rise very sharply to start the week, Tuesday and Wednesday. So yeah, it was kind of an interesting one. And then you just saw the VIX kind of drop off there pretty good Thursday, Friday, and you saw the market really tick higher. Kind of was mentioned this earlier in the week on the live stream. Yeah, kind of weird to see the VIX spike as fast and as hard as it did, and the market wasn't really breaking down. So it was like one of two outcomes was going to happen. Either we were, VIX is going to drop and we're going to pop on the market, or the market was about to really drop. Well, we saw the VIX drop on Thursday, Friday, and the market, just absolutely soared higher. So there you go. The DXY would continue higher to start the week, and then kind of gone sideways there Wednesday, Thursday, Friday. So right now, kind of looks like we're just kind of hanging out. Doesn't really seem like we're reversing a little bit. Kind of ended at the lower end of the session on Friday, so maybe we pull back a little bit earlier this next week. But we're gonna have some major moving averages coming up this next week, which probably helps support the dollar to push it higher later, or at least bounce. And we'll have a major level up here around the 104 level if we get there sometime soon. The GLD, the gold trust, nice drop off there on Tuesday, Wednesday, a nice bounce back there on Thursday, Friday. The dollar was just kind of hanging out. So yeah, I mean, I would just continue to be bullish on gold. Nothing really going to change that mind right now. 10-year yield, very nice upper wick coming in on Friday, but we had a very strong move on yields this week. Up very nicely Tuesday, Wednesday, and Thursday. I see a little bit of a pullback probably coming in this next week. Is it a major reversal for now? Not quite. If we get a couple days of coming back down, we get below the 10 and 20. Maybe we'll continue lower. But if we have like a little bit of a lower wick, which I'd imagine we'll probably have like a little bit of a lower wick, and try to bounce here early this next week as the 10 and 20 moving average come up. Probably look for this to continue higher. Probably towards the end of next week and going into tech earnings week in 2 weeks. 10 and 2 inversion, nice pullback here, kind of for the week. Very nice drop off here. On Wednesday, we had a very nice uptrend, basically since the middle of December up until the beginning of this week. Very nice continuation higher on Tuesday. Nice pullback, kind of pulling back into the 10 EMA. It's kind of what we did before. We had a nice run up until about this level, and then we kind of bounced around violently there. So yeah, I got nothing. I mean, it's kind of makes sense. It kind of looks like a little bit, it's probably just still like in a choppier uptrend and going to continue that way. Maybe we pull back a little bit more before we continue to make our next leg higher. But I would highly doubt it that we get back down to this level, because it seems like we're just making higher basing levels now. So I'd imagine even if we do pull back and base out, it'll probably be around the negative 3.5 area to maybe negative 3 area here, and then probably push higher later on. HYG, the high yield corporate bonds, tried to break down earlier this week, Tuesday, Wednesday. Nice little bounce there on Thursday, Friday. Not really too much going on. It seems like it might be setting up somewhat of a pennant pattern, as we got lower highs coming in and higher lows coming in. So maybe we'll set up with some kind of pennant pattern or consolidation pattern in here. and we'll just have to wait and see. But right now, it's not really breaking either way currently. So just gonna depend on yields and some other things. LQD. Now this is a little bit different because we got lower highs coming in and lower lows because of that Friday little lower wick there. We actually did take out that low back from January the 5th. So it's a kind of an interesting one. Could be a flag pattern. Could be a false breakdown there on Friday. Maybe you want to go bullish on bonds. Try it. Just because, it's a pretty low risk spot and you'll have a very easy stop loss right there, right? So you can put an entry in here. You can put a stop loss down here under the 50 EMA, but if it kind of rolls back over, gets below the lower wick on Friday, you just cut your losses and you just say, all right, it's going to roll down. I don't want to take the full loss and just move on. And if it does do that, you can probably just maybe even flip the position, just go bearish on it. The TLT Treasury Bond ETF has been getting absolutely smoked to start 2024. Makes sense it has a little bit of a bounce here because it definitely has deviated away from the 10 and 20 moving averages, definitely under that 50 EMA there on the daily. So it makes sense we have a bounce a little bit, maybe going into next week. So maybe that does spill over to being bullish on bonds on the other two as well. And then maybe we'll see it drop off a little bit later on. But yeah, TLT just not looking good. All right, the RSP, the equal weight S&P 500. Even though I was mentioning earlier that the Qs and the SPY making all-time highs, well, the RSP is not, and it's not all that close. We are barely trying to hold on to these highs that we put in for 2023, and we are doing our best to do it. We did have a little bit of a head and shoulders formation kind of happen between the second half of December, the beginning here of January. Broke that down this week. Say, hey, maybe take a shot trying to go bearish on that neckline. We still have what could possibly be some lower highs. It's not totally clear if we're going to go higher. Once we kind of look at the SPY, it kind of looks like we're going to go higher just because the SPY's at all-time highs, looking pretty strong, but doesn't mean it's going to be everything in the SP 500. Just might be heavy tech like it has been the past couple of days. So it's kind of a tough one to kind of judge right now. But yeah, as far as the RSP goes, I could have, I kind of justified, maybe making a bearish play on the RSP because it's definitely been lagging for much of the past year. And it's been, heavily concentrated in just one segment of the market for the bullishness. And we've seen that very much here over the past couple of days. The DIA, the Dow Jones Industrial Average, you never would have thought that this would be leading, but hey, this thing was making all-time highs back in mid-December. Nice consolidation above it. Didn't roll back over and get back below the previous all-time high level. So yeah, I mean, here we go. Past couple of days, very nice sharp bounce higher. AAPL picking up an upgrade on Thursday morning. Probably helped pushing this higher. Don't really know what UNH was doing Thursday and Friday, but it doesn't seem like it was hurting anything. And yeah, there you go. All-time high area and probably just continues higher. There's not really much level to kind of set up or look at. The one thing I will say, if we do roll back over, we have a very clear support level right here before we get to the previous all-time high. So it is one, if we do break both of those levels, I would imagine the bears probably do come in, but for now, just ride it. The IWM, the Russell 2000 ETF. All right, nice bounce. Kind of was looking for this after the early week breakdown Tuesday, Wednesday, coming all the way down at least to the 50 EMA. Bounced off of that, comes back up to the 10 and 20. Also, the lower end of this consolidation area that we had for about a week and a half right here. So that's a pretty good spot to probably go bearish on the IWM. Kind of makes sense. Say, hey, I'm going to snag bearish position there. I'll put the stop up top, maybe up over this wick right here. But if we continue higher and we're going to get back through this channel, you just say, all right, I'm going to cut my losses if it doesn't immediately reject and go lower. Nice volume also coming in on Friday, so maybe we will continue higher, but it's definitely an important day because if we don't continue higher and we do roll over, people are going to be trapped or feel like they're trapped, and that's a lot of people that were buying a day. And it's kind of interesting because it's not really like the bottom day, and it's also not a top day either, right? So it's kind of an in the middle day. Typically you don't see volume days like that are in the middle. You know, when you see huge pops on volume, they're on breakout kind of days. So it's an interesting one. That's the only thing I'll say. It's a very interesting one. And if we do roll back over, a lot of people that were buying on Friday probably made the wrong choice. They're going to be selling. Take a look at those Qs, those triple Qs. Very nice, strong volume coming in basically every day this week. Just, you know, increasing volume there. We were having gap downs Tuesday, Wednesday, but then it comes through on Thursday. Huge gap, makes a run, gets to the all-time high level, and yeah, there you go. That was kind of the day that kind of said, all right. Tech's probably going to carry the market higher, and yeah, it definitely has and continued into Friday. Now, we are going to have tech earnings, not this next week, but the week after, the last full week there of January, and even going into the last half week of January, the first part of February. So, we will see kind of how tech earnings live up. A lot of people probably just hopping in on the Titanic, I guess, as it's going down. I don't know. That's my analogy. Maybe not. A lot of people are baking in. We're gonna see increasing revenues, margin expansion, GDP growth, also rate cuts. So I don't know how you do all that. You get rate cuts as well, and we got Fed shrinking money supply and balance sheet. So there's a lot of things out there that are, just the market is demanding a lot of perfection, and it's one that something's got to give. So we'll see when we get to tech earnings if everything's going to live up to it. And so far, they really haven't on tech earnings, but they keep making promises. So we'll see. SP 500, yep, it's kind of what I mentioned, breaking out higher, new all-time high on Friday. There's not really going to be much that kind of stops the Qs and the SPY right now. We might just continue to push higher this next week. I don't think I would want to be buying into this. Very nice extension into all-time high areas. Kind of just continue higher. I wouldn't really want to be chasing this, expecting like we're going to go, 10% higher or 20% higher or anything like that. I would rather be, if I'm in it, I would just rather be, kind of trailing it with stop losses. We got two pretty good lower levels to say, hey, you know what, if we come back down, I'm going to exit out if we get back below the low that we put in on January 17th and then also January 5th. So we got some pretty good lower levels there that you could say, hey, if we get back below those, I want to be out. Other than that, just let it run, let it do its thing. And one last thing I wanted to show before I wrap this up. Just remember, back in the the 60s and 70s was not exactly the best time. This was last time we had inflation that was rising and whatnot. But we had this weird magnaphone type pattern. Now this is very, very weird to see on the stock market. You'll see this on stocks every now and then, like individual stocks, but very rarely do you see this on the stock market. Basically, over a time period of like this, looking really long term, because we're looking at a monthly time period over several years. This is like the only one that is like this, right? Where we got a high. What year was this? So we got a high in the 60s, we got a high in 68, and we got a high in 72. But we also have lows in September 66, low in July of 70, and then a low of October 74. So yeah, just a weird magnaphone pattern. So maybe we're gonna do something like this where we come up, we make a little bit of a run, then we come back down and we snag the previous low, and then we go on another run. I don't know, maybe. I wouldn't put my money on this playing out every time, but it is one that I do think will probably be coming back down later on. I think there's a little bit too much optimism out there right now. And another thing about kind of our current marketplace is this is one of the most underperforming, bull markets if we're going on a new bull market or whatever. And I get it. There's a lot of AI, optimism and stuff, but this is like one of the biggest underperforming bull markets that we've ever had, and really that kind of started all the way back in September, when we deviated under the previous kind of bull market trajectories off previous bear market bottoms. So, we have bounced very strong in November, December, but that doesn't mean, it doesn't roll over later. if things don't go perfectly well. Alpha Hunters, have a great weekend. Take care, and we'll talk with y'all next week. Alrighty, take care, Alpha Hunters.